Hey everyone, good afternoon. It's Anna with TRA. I see a bunch of you are still coming into the webinar, so we'll give you a few more seconds to come on in. But just thought we'd start with introductions. My name is Anna Tausen. I'm the Chief Revenue and Innovation Officer for the Texas Restaurant Association based out of Austin. And we've been doing a lot of these really good educational webinars recently. This one obviously is on PPP, and we have some wonderful experts with us today who would like to remind you that they only sometimes feel like experts, especially when it comes to PPP, because it seems to change literally every day. So we'll go around and do introductions. Brian, then David, then Javier.
Hey everybody, Brian Stubbs, own a bookkeeping and consulting company here in Austin, focused on the hospitality industry, called Genuine Article, genuinearticleatx.com, and happy to be here.
David.
Hey, my name's David Denney. I'm president of the Greater Dallas Restaurant Association, and by day, I'm an attorney. My firm represents small and independent companies, growing companies that do hospitality, or companies that do hospitality well. Excited to be here and glad I'm not an accountant today.
And good afternoon, everybody. My name is Javier Jorge from Pilot Bank. I am the SBA director for the bank. And it feels like I'm a banker now, night and day, and on the weekends. So happy to be here to help as many people as we can.
Really appreciate it. Really appreciate all three of you being here today to answer a lot of these questions. I will let everyone know this is being recorded. We will take as many questions from you as we can. Whenever you registered, you were also prompted to ask questions. So we have a lot of them already, and that we'll dive into as many as we can. If you have follow-ups afterward, please go ahead and yeah, he's with Genuine Article, Nick, that's right. Just making sure you got the name right. But if you want to chat with each other while this is going on, feel free to use the chat window. Please use the Q&A window to ask your questions. And even though, you know, 3/4 of us are from Texas here, I do want to welcome our Florida friends too. We've done this panel together with the Florida Restaurant and Lodging Association. So welcome everyone from Texas and from Florida. So I think I'll ask the one guy from Florida to first start us out. Can you tell us a little bit of an overview of what is the Paycheck Protection Program and where did it come from?
Okay. So the birth of the PPP, Paycheck Protection Program, arose through the CARES Act, which was being debated towards the end of March, which feels almost like a year ago at this point. And it was necessitated as part of the that $2.2 trillion stimulus program to help, mitigate the risk or the issues of the pandemic, right? And, the first rollout was the PPP allotted $349 billion through the SBA to utilize the bank system, traditional SBA lending banking system, to get money into the hands of small business owners in order to, and this is the general spirit of the program, continue paying their employees and stay, quote unquote, somewhat operational during this shutdown period. And that was the intention. So application could be something else, but that is the genesis of the program.
That's perfectly well said. Brian, did you want to add anything to that?
No, I mean, I think that's good.
Okay, perfect, yeah. Great, so I think we should just jump right into the main question that we keep getting from everyone on how to spend the funds to achieve forgiveness, period, and then especially when they're not open or not fully open. So Brian, I think I'll let you start with this on how to achieve forgiveness, and then each of you can kind of answer a piece of this, and then we'll dive deeper with some individual questions.
Yeah, great. I think, everyone's been facing the same questions and frustrations, right? We're waiting for more guidance from the SBA specifically about forgiveness. But what we do know so far is this: your 8-week clock begins when the money hits your account. The first infusion of capital when it hits the account. That's the 8 weeks. From all interpretations and understandings, it's going to be cash basis. It's going to be what you spend in those 8 weeks, not what's accrued, not what was previously paid out on last month's rent or any of those. It is the It is the breakdown that 75% towards payroll, 25% for rent and utilities. The definitions of those are pretty clear with the SBA guidances from treasury.gov, but at the same time, there is some interpretations that we can probably cover. But yeah, I think to answer the big questions is, the clock has started now if you've received the money. And it's important, we'll get into this as well, that each of those spends are tracked diligently and going to be shared with your banker. It's your lender who is going to be helping you with the forgiveness. And that forgiveness is going to start when the 8 weeks is over. And I think Javier can speak to this, but they're saying that you will be notified within 60 days of that submission whether forgiveness was granted.
Yeah, Javier, do you want to jump in there?
No, that's perfectly stated. Almost like you read it straight from the law. Yes, as a matter of fact, another, just one caveat: the bank wants to make sure everyone is forgiven. I'm telling you right now, we do not want to service these loans. 1% is not a good interest rate to have on the balance sheet, just to put it out there. And you're gonna have communication from your bank before the 8-week period to start calculating your forgiveness. The law provision that the bank will notify the SBA no earlier than 7 weeks out in order to start selling the loans back to the SBA from a forgiveness perspective. So the incentives are aligned between the banks and the businesses in order to make sure that we maximize the ability of amount of forgiveness that each applicant has.
That's really, really helpful, Javier. Related to this, what kind of income tax considerations exist when it comes to the forgiveness piece of the loan? Any three of you could take that.
Sure, I'll jump in on that real quick. And then Anna, we did get a couple of questions directly related to the payroll question. So let me speak to that really quickly. And Brian, just like any other day, if I'm completely 100% wrong, correct me. So the question is, if you run payroll and half the payroll was from a period before your PPP deposit, your funds hit the second week of your payroll period hit after you got your PPP money, and then you paid paychecks, I actually think the entire payroll is payable under PPP, because if your PPP funds hit on the 13th and you ran payroll and paid it out on the 14th, that payroll is going to count. I don't think we're accruing backwards. We're counting dollars paid out on that payroll, regardless of when that work was done. That was payroll that fell within the right period, which is a good thing.
That's my reading as well, David. I just don't think that they're going to be able to, nor would they want to get into the nitty gritty there. They're going to say, show me your payroll reports during this 8-week period. Show me the dollars that correspond to the gross wages and the state unemployment taxes paid. Show me your invoices for your health insurance. Show me all those applicable costs. Show me the invoice from your landlord. Put it in a package. Make sure it's all the dates of each of the payouts are within the 8-week window. Show us how those dollars relate back to your PPP spend. And my hope would be that the bankers then have a nice package. They take it to the SBA, and I can only imagine with the way the SBA is handling the rollout of these funds that they're going to be another bottleneck on the back end in terms of forgiveness. So the more organized we are, my hope would be the easier it is to get forgiveness to happen.
And my recommendation is, plan ahead. At the end of the day, if you know that you're going to be using all your funds for payroll, or the 75% for payroll and the 25% for utilities or rent, lease expense, or mortgage interest expense that was in line before February 15th, then tell the bank, right? Break it down. Give us a spreadsheet of exactly how you expect to use the funds. That way, it makes it simple when you make the application for the forgiveness. We're just going to check what you told us you were going to do and what you did, right? So if you have the supporting documentation that has the utility bill, the rent invoice, and the payroll documentation demonstrating that the payroll was paid, the bank is not going to put too much effort into, making sure that the information is right, as long as it's prepared in spoon-fed to the bank. Once again, our interests are aligned. We do not want to keep this on our balance sheet.
Got it. So before we dig in a little bit more to the calculation side of calculating forgiveness, I want to pull back a little bit because Sharon Watkins asked a good question about the look back periods, right? So Brian or David, do you want to explain what the 2 look back periods are to determine your FTEs, what that timeline looks like?
Well, before we skip it, can I answer your income tax question since I was the one who took us down the rabbit trail? Or do you want to go back?
Stick to the thing at hand, David?
Sorry. Okay.
Yes. Go ahead. Answer both.
Okay. So it's real, that answer is easy. The CARES Act is very specific that the forgiven loan funds are not income. You'll be spending it as expenses, but it is not, the forgiven grant money is not going to be counted towards your business income, taxable business income.
Okay, perfect.
Sorry.
It's all right. So look back periods. What are the 2 look back periods to determine FTE, headcount, and payroll costs?
Well, that's where, I'll step up. I'll talk to that. So this is where, of all the forgiveness trackers, forgiveness calculators out there, the one at acuity.co is the one. It's a friend of mine out of Atlanta that's done a wonderful job. It's a free calculator that you can download. I know that Anna can share the link with everybody. What's good about it is it references the parts of the law specifically on these look back periods. And so it's February 15th through June 30th of 2019, or January through February of 2020. Those are the 2 look back periods. Those are the denominator of the percentage that we're calculating. So you get to choose the lower of the 2 numbers, and then your numerator is the FTEs that you restore. That percentage, if it's not 1-to-1, if it's 3 to 4, then if you're looking at, that would then be, you would be 75% is what you would then be looking at in terms of forgiveness. So that's one calculation on the forgiveness. The other one is the payroll level calculation. And I'd be interested to know Javier's interpretation of this. But the payroll level seems to state both, meaning no single employee can be reduced by more than 25%, nor can the overall payroll out the door be reduced by 25%. And I'm assuming that is annualized, right? In terms of your application, you gave them a monthly payroll amount. It's that number that is that they're looking at as no more than 25% reduced to that number. Is that how you're reading it, Javier?
That's our understanding today on
right.
How we have to calculate that. Correct.
Right. Well, and you said something important there that I think I wanted to reiterate here, and this is what I'm hearing from other congressmen, Texas representatives. Heard it from Congressman Brady's office, which I think was an important one, and that is, I'm recommending my clients, and I recommend everybody on this call, if at all possible and feasible, to change to weekly payrolls so that you can adjust if guidance changes. Mm-hmm. We were expecting guidance by now, but we haven't received it. So go in with that first week or second week with the most information and best intentions, document what you're doing. And then if there's an announcement from the SBA that somehow changes what you've been doing, then you can point to the specific payroll that you made the adjustment. So, not that, you never want to be in a position of asking for forgiveness instead of permission with the federal government, but we are not being given an alternative here. And so I think what you do is you do your best to be justifiable and defend your actions and your choices. Your lenders are going to, like Javier said, your lenders are going to have your back in that. And what you just need to show is that if something changes that is counter to what you've been doing, that you've adjusted as quickly as you can.
There's nothing like a $1 trillion program governed by something called the interim final rule. It makes perfect sense.
2020, baby.
Can we talk a little bit about partial forgiveness? I know there's a question in the Q&A box too about the ability to use the loan for 100% of payroll. So maybe address that, Javier, and then Brian, can you tackle partial forgiveness?
It's simple. If you use 100% of the loan for payroll purposes, then, and you did not reduce your head count, then you will be 100% forgiven. David?
Right. The option to use it 25% of that money on other things, mortgage interest, rent, and utilities is merely an option. If you want to put all that money to payroll, do it.
Great.
And if I may add, if you don't, let's say you don't have you don't use it for something that was eligible, your payroll count, you have a portion that's left, terms of this loan aren't bad. 1% interest rate, 6 months of full deferment. So it's not due in June. It's 6 months after the origination of the loan is when the first payment will occur. It's a 2-year maturity. The way we wrote up our note, there's a balloon at the end of the 2-year period with the remaining balance from that 6-month portion. So at the end of the day, it's the worst outcome. It's not a bad one. If there's a piece that you got that's not forgivable, 1% interest rate, when you look at inflation, it's not that bad. Although, anything is, debt is debt at the end of the day.
I'll speak a little bit from the client perspective there, though, and that is the uncertainty around reopening, the uncertainty about restaurants' ability to restore revenue levels. We can't see out until June 1st, much less November 1st, and know what the environments are going to be like. So I think one of the things that a lot of people, and we'll get into this in terms of, this is where partial forgiveness is part of the thing, right? So let's say you don't get to your FTE count. Let's say you only get 75% of the way there, and your forgiveness is therefore, it is not a binary choice as I understand it. You can have partial forgiveness of the loan. First and foremost, the thing that I've heard from restaurantowner.com and other, it's been consensus from the get-go. This is a loan first with a grant portion. So I know that a lot of people don't want to carry debt. They don't want to do certain things, but I think you use it to your advantage to what fits your business model today, what your revenues are, what your staffing model looks like, and you do your best and you go for the forgiveness. And if it is even reduced by 75%, well, I mean, it'd be great if for these 8 weeks, we were full restaurants operating at the old revenue levels and had 0% labor costs. That would be a windfall for the industry, but we're not going to get that, unfortunately. This program was not targeted to our specific industry. It was a large sweeping program. And so I think what we can do as a restaurant industry is do our best. And if we end up just having, let's say, a 10% labor cost during those 8 weeks, that's still a lot better than it was, assuming that you're open and doing some revenue, it's still better than it was previously.
Well, look, we understand the frustration too. I mean, I've had 50 conversations about the fact that people feel completely unable to deploy the PPP in a way that can make it forgivable during this time when they're dark, when they're reduced to 20% of their normal operating staff. And it's very frustrating. We're simply working within the framework the government has written for the money. It's a loan first. Try to achieve as much forgiveness as you can. There is also an option to return the funds. If you don't want to carry debt at the end of that 8-week period, you can put the money back into the kitty. But
right, no prepayment penalty.
It's so frustrating for people who really want to use that money properly, and that's really why we're doing this.
Anna, this may be an interesting time to bring up, if I may. I know you're moderating, but I see a segue here. Well, it's about communicating with your employees, right? It's about bringing these employees back that maybe don't feel safe or are, I know the common refrain is, I'm making more on unemployment than I am. I've been communicating a lot with the TWC. I know that you guys are having another webinar with the TWC on Thursday, which I'll be watching. Communication with your team is important. twc.fraud@twc.state.texas.us. I'm assuming there's an additional email in Florida that is applicable. But if somebody refuses to come to work, you've made them an offer to work, you are supposed to document that, and you are supposed to share that with the TWC. What happens after that, I do not know for your employees, but it is realistic that that is an option. There was also a law implemented just today that requires employers to notify their employees if a benefit, even a partial benefit, is available to them. Both Texas and Florida have, in Texas it's called shared work, and in Florida it's called short time compensation. These are hours reduction programs that existed before the pandemic, and they are used to retain staff, which is again the spirit of the PPP. But if they are experiencing reduced hours, you as an employer can let the Workforce Commission know, or they themselves as employees can make their own reduced hours claims. And there's calculations about how their reduced hours claims are calculated, but it is possible, and it remains to be seen. But I do know that there are people that are participating in shared work right now. They are experiencing reduced hours. They are being paid a percentage from their employer. They are receiving a partial state benefit, and then they are also receiving the FPUC $600 a week. So there are ways for you to take care of your employees, hire them back, and for them to still retain a partial benefit. We have not seen anything from the SBA yet as to whether that guidance or whether that will somehow be, what's the word I'm looking for? If that'll somehow be, counteracting the spirit of the PPP law and somehow putting you as an employer, if that would affect your forgiveness or not. So I say, research, research, research. The reality is that after the 8 weeks are over of the PPP, looking at shared work programs as a way of retaining your team, but also them retaining a partial benefit, I think is worthwhile.
Yeah, no, that was a very good segue, Brian. Thank you for jumping in on that. I think that's a really important program that I know a lot of people in Texas were surprised to hear about. I'm not sure about Florida, what the use percentages of that, but I think it's really valuable. And you guys should definitely look into it if you can. It helps your employees, and that's ultimately what we're trying to do. Like Brian said, the spirit of what the law was about. So let's talk a little bit about tracking the funds. I know you guys have some advice, and Javier, maybe you can tell us a little bit about whenever someone in Florida receives their PPP loan, what kind of advice do you give them for how to track it and track its use? Do they put it in a separate account? What kind of advice do you give them?
So having a separate account, it can only help, right? I don't see a detriment behind it, unless it complicates your payroll activities, if you have to move your payroll processing. At the end of the day, it's about, planning accordingly ahead of time, as best you can, right? Obviously, circumstances change over time. And any time that you're going to make deviate from the plan, notify your banker to see if this is still within the guidelines as of the moment that they've asked, right? So, I think collaboration and communication is key across the entire origination period and forgiveness period, and who knows what's left post forgiveness. And ultimately, the things that we've been advising our clients to do is we're most likely going to be looking for the same supporting documentation that was provided initially, or some deviation of it for the forgiveness perspective. We understand that there's going to be a special document that the SBA will provide that's going to be an attestation on behalf of the borrower declaring that they used the funds appropriately and that everything was done on the up and up, and then ultimately the supporting documentation that provides the breakdown of that calculation depending on how you use the money. If you have it all in one account and you have it in the same account in the institution and you receive the funds, it's pretty easy for us to pull in a statement and see the money's going out and the money's going in and how it's being used, right? So that would be a quick way to make it, dummy proof, right, for the banks. But it's not a requirement, I say, at the end of the day, you don't have to, and this is another question I get a lot from the clients that are receiving the funds. You don't literally have to use the same funds that you have in your account. Whoops. You don't need to use the same account that is, the same monies that is in your account. As long as you spend the money between now and then, you can still have your full PPP loan in one account, but you're spending payroll from your traditional operating account. And as long as you document it, the expenses accordingly, then you're going to have the loan forgiven, right? It doesn't literally have to be the same funds.
That's really helpful. Brian, I see that there's a question going on between Janet and you guys in the chat window. And I do want to ask Javier this question too. You want to rephrase it for us?
Yeah, so the question from Janet was, are all payroll taxes included in the forgiveness? And the answer is no, only the state portion, the state unemployment tax rate applied to those payroll dollars is part of the forgiveness. She also asked about 401ks. And I hadn't seen specifically 401ks. I know healthcare benefits were part of payroll costs, but I'm pretty sure that 401k matching is not. Correct, Javier?
We had the interpretation that it was, any benefits, the compensation or, stipends, bonuses. We've seen any compensation to the client in the form of, to the employee, whether it's health benefits or retirement benefits, all count.
But one thing to speak to that, because you're talking about bonuses, right? And so everyone kind of gets all excited because they're like, oh, I've got a plan now. I'm gonna bonus everybody out on the last 8 weeks. I think what would be important, again, and this is just a blanket statement, I'm not a lawyer, but it's just important. It needs to be defendable, and hopefully whatever programs you're administering need to be documented prior to February 15th. You need to have supporting documentation that says, this is my manager, they had a quarterly bonus, it was based on this, it was discretionary, and I'm choosing to pay it, and here it is in writing, right? It's not this kind of like new bonus structure to somehow, and that's just all of it. I think we just don't know what is going to happen with this program from further guidance, potential audit, we're talking years down the road. We just don't know. And so I think ultimately, I'm advising my clients, and I advise anybody on this call, do what feels right, what is right, what you can defend under normal business circumstances. Everybody's business model is changing. It may be that you don't rehire bartenders, but you hire a social media person that can work from home. That's defendable. That is clearly what your business needs right now. But, hiring, I don't know, some things that were never part of your employment plan or never part of the new model, I think you're putting yourself at risk unnecessarily.
Yeah, I just want to underscore that because I know that we get this question a lot, right? Do I have to bring back the exact same people? No. And do I have to bring them back in the exact same jobs? Also, no. You can create new jobs, like Brian said, for what you need for your business at the moment. Right now, that probably means some people that can handle, a lot of to-go orders, frontline staff, answering phones, website, marketing. Those are the kind of things that you probably need right now. Although we have seen some other people want to take this time and hire people to do some improvements of the actual structure of their restaurant right now too. And that is also a possibility if you can hire back your employees to do that. So that there are options. There is some flexibility in that, as long as, like Javier and Brian are both saying, you document those needs and can actually demonstrate that it went to, helping the business and to bring people back on to work. Like it is the Paycheck Protection Program. We're trying to bring people back to work. Brian, looks like you're about to say something.
I'm sorry, my brain wandered back to the federal tax forgiveness piece, and I just wanted to make sure that people are also aware that the employer portion of the Social Security tax, they are allowing those to be deferred. And I shared a link, I think, with you, Anna, last night. But there is an opportunity for you to defer your Social Security portion of the employer Social Security portion of the tax while still participating in the PPP. And there are two dates in the future. I even think that they're December 31st of 2021. But they can be deferred if you need to hold on to those cash dollars. You're going to have to document them. You're going to have to make sure that they're paid on the schedule that you agree to. But there is information at the IRS website about the employer portion of Social Security. So for these 8 weeks, theoretically, you could defer your Social Security employer. You'd still have to pay the Medicare employer portion, and then you would be forgiven on the state. And so the only cash out on the employer portion of taxes in these 8 weeks would be that Medicare tax.
That's very helpful. Very, very helpful to know, Brian. Thank you. I want to bring this up because we've gotten a few questions related to it, and that's on tipped employees. And I know we go back and forth on this a lot, but when you bring back staff and they're tipped employees, they receive basically the payroll that you're paying them as a restaurant owner plus the tips that they get from working, correct?
Well, if I may, tips could be included in the calculation as far as available compensation for calculating your PPP loan amount. So if you didn't include it, you should do so as soon as possible.
All of my clients did include tip compensation as part of the ask. And what we're doing is, again, taking some just defensible look backs. I'm saying, let's run February and January average hours worked and average gross wages. Let's determine everybody's average hourly rate. And then when we bring them back to the payrolls, let's make sure that we're bringing them back onto the payrolls at that level, no more than 25% reduced, either on the hour side or on the payout side. That may mean, and again, in this instance, they would be paid pretty much or made whole as they were previously, and then there may be additional tips on top of it. Now, in Texas, and I know it's the same way in Florida, a lot of people to kind of mitigate the tipping and the contactless pay and other things have just been adding a service fee to dining checks. And the Department of Labor guidance, and I'm sure everybody knows this with tipped employees, and that is, if every employee is making more than $7.25 an hour, then the tip pool can be administered how you see fit according to Department of Labor current guidance.
Yes.
If it's a service charge, that is revenue that is booked on the income side of the P&L for the employer. They can do with those dollars whatever they want. And so I think that there's an interesting kind of way of managing your business successfully, having an 18% service charge, bringing in as most dollars as you possibly can in this time period. You obviously have the PPP to make sure that your employees are being compensated fairly. Administer a compensation package that takes care of everybody. Back of house, front of house, back of house. Again, your whole job mix just changed, right? And so gratuity is even a weird thing in terms of, delivery fees, service fees, all those things. So it's something to consider. But yes, the PPP dollars, if they were included in your calculation, tips were included, then you should include those in how you're paying it back out to those employees that you are retaining. Because again, that's going to be part of that payroll level forgiveness, judgment, right? So it's like, you're going to have to get back to 75% of that.
And if you were uncertain about how to pay tipped employees when you went dark and the world changed and you decided to bring those people in and pay them $10 an hour, any additional payment to a tipped employee is fully forgivable under the PPP too. It's clearly stated that that's the case. So paying out those tips to those employees should be counted in your forgiveness amount when you used it to get your loan in the first place.
So what about 1099 workers? That's a good question from the Q&A window for like repairs on the restaurant and stuff like that. Can the fund? Okay, wow. I won't even finish the question.
Sorry. As a 1099 contractor, I sure wish I was going to be, I sure wish all my clients could have added me to their forgivable costs, but unfortunately, as they will tell you, I'm unforgivable.
Nice. Well, it needed to be asked, and good question, Sharon. Thank you for asking it, because I'm sure a lot of people were thinking that as well. That's pretty funny. Okay. We've got a lot of very specific questions, so I'm just going to dive in, guys, and let's try to get through as many as we can. Tracy just asked a question, like, what if your payroll is at 40% of last year's level? Is there 40% forgiveness or no forgiveness? So this is on the partial forgiveness kind of question.
It depends on what you ask for. So if you ask for 100% of your payroll allocation for the headcount that you had last year or the trailing 12 months, then the expectations you're going to have the same amount of employees. So the calculation just gives you the maximum amount that you can apply for. It doesn't mean that's the required amount that you need to request. So the conversations with clients that I had that know they're not going to reach the same levels, I said, okay, you know, let's say you're eligible for 300, but you know that you're only going to have the capacity for $200,000 of forgiveness. If you don't want to have a $100,000 loan, then ask for 200.
Yeah, that's fair.
But it's not a zero forgiveness game. If you're at 40% of what you were last year, it's not binary. It's not all or nothing.
Yeah.
It's going to be just a reduced forgivable amount.
Exactly.
So we have a very specific question that was asked by Vanessa. We unfortunately had to temporarily close our business and had to lay off our staff about mid to end of March. They received their PPP last week. What is the opinion from this group on what they should do, as their clock has definitely started? They have not reopened and probably will not reopen until June.
That's a good question. There are thousands of
Hey,
people.
Brian, you want to take that one?
I mean, I'll certainly give it a shot. I mean, this goes back to my recommendation for weekly payrolls, because, you know, again, the numerator on that FTE, as I understand it, is an 8-week average. So if you roll with 3 weeks of zeros, you're going to have to ramp up the back end of those 5 weeks to get, if in fact you're trying to get one-to-one, and you need to effort that. But let's be honest, you're not, most will not be able to get there. And so off the bat, everybody needs to understand that full forgiveness is just not really a viable option for our industry. And that's what you guys at the TRA and the NRA and IRC and everybody's been complaining about, is that those occupancy-based businesses, this is not a program for us. This is a great program for those that have workers that can work from home and have had zero interruption to their payroll and hadn't had to lay anybody off. It is the worst for us, but it's the best we have. And so my recommendation is do the best you can while being safe. Communicate to your employees. Try to start to put together a reopening plan that works for your community, that works for your business, that works for your employees. And it may be that you're hiring new people that you haven't hired before to do new jobs that haven't been part of your business before. But I would say that starting to at least put numbers on paper and in the payrolls will help. Anything will help. So if it's the 2 owners and the 2 managers that need to come back in the first week, start there, and then continue to talk each week with what you need and how does that work in terms of a producing revenue plan. It could be that you still don't open, but what you do is some sort of cooking class online that you charge $25 for per participant, or what. I mean, it's a, restaurateurs are great at being nimble and creative. And once again, we have to rely on those instincts to survive, because the nature of this crisis and the nature of the program don't necessarily align with our industry.
Yeah, it's true. And related to that as well, when it comes to advocacy on trying to get these changes that we need, TRA, IRC, and NRA are all working really hard to try and get this changed. So I don't want to dive too much into the grassroots efforts there, but there's a lot going on. And as long as you guys are willing to share your story with the people we're in touch with, it will help. It will go a long way. And saying that the 8-week timeline is not reasonable, the 25-75 split is not reasonable, that's what we're really pushing back on now. So we're trying, and we will continue to try to change that. Brian, I wanted to draw your attention to something that Sherry is saying in the chat window. It wouldn't, Sherry, and that's why Brian is really advocating doing the weekly payroll, if you can do that for this time period. So you might want to consider that.
Well, and one last thing that I'm going to say is at least for my clients, I'm going to, whatever end date of the 8 weeks, I can promise you that there's going to be a payday the day before, or a special payroll run for accumulated hours, even if they're partial on that last day.
Yeah.
You know,
Absolutely.
I mean, we have a clock. We know when it's going to run out. We've got to do everything within it in that clock frame that again compensates everything that's accrued in those 8 weeks. So I'm going to make, so I think, again, you run your normal payrolls through your normal payroll schedules that make sense, but I would look at a special payroll to kick it off and or a special payroll to finish it up.
Yeah, good idea.
It needs to be out of the bank before your end date.
Yep.
And another comment on the companies that are running dark right now, don't forget about the 25% that you, unless you achieved renovatement. First of all, thank God you got funded. There are a lot of people still waiting for that. Second of all, you have probably fixed costs that will be forgivable, so go ahead and prepare to deploy that properly. And then, you know, like Ryan said, you can make a plan to bring back your employees as best you can. But the name of the game for your 8 weeks, for everyone's 8 weeks in this, is cash is king. You have it in your hands, and you have the ability to deploy it. Now, we've talked over the past few days, Brian and I talked a little bit yesterday about what's a smart way to deploy it. There's some really loose interpretations of how you deploy it before it becomes a loan to you, or an official loan that you can do whatever you want with on the end of the 8 week period. But spend it wisely during your 8 weeks, and then you still have the ability to keep it, convert it to long-term debt or 2-year debt, or pay it back.
I have a question here, was sitting here for Javier from Angie in the Q&A window related to loan balance after the forgiveness is determined. Is the interest percentage calculated on the full amount that was funded initially, or just on the remaining balance due?
From what I understand, is the remaining balance due. So the interest is accruing during the deferment period, but the amount that would be charged to the client was a portion that is not forgiven.
And question on this too, I don't know why people would do this, but could they take that remaining balance and refinance it with the bank or roll it into another loan program that you guys have?
I mean, yes, but good luck trying to find something that's unsecured, no collateral, no personal guarantee at a 1% interest rate.
You know what? I just needed to ask Javier. Okay. Let's talk a little bit about where did it go? We'll keep asking questions and I keep losing it. Related to the overall spend on payroll during the 8 week period. Does it need to be the average, or is it during a single day, or is it during a single week? In order to determine forgiveness, what are we looking at for the payroll amount that's spent? Is it average over those 8 weeks that it has to reach 75%?
I think the read. Go ahead, Javier.
It's just cash outlay, right? So if you have $75,000 of payroll, you should spend $75,000 of payroll.
Okay. I hope that answered. I'm sorry, we lost your question already. There's so many questions coming in, so I hope that answered your question. Maybe David or Brian, you can ask this too. Are there other creative ways that you've seen your clients come up with to spend the payroll money within the PPP? You mentioned, doing drive-through and having maybe doing online classes or something like that. Have you guys seen anything else that is inspirational? David?
Sure. I mean, I had a client call me last week and say, can I bring some of my employees back to paint and clean the restaurant? Absolutely. They are already on the payroll, so deploy that money. If they're willing to come back and work for you to do that, that's great. They're not 1099 independent contractors. They're your own employees. So things like that. I mean, especially people who've been dark, they're not going to be able to just flip the lights on and start serving food. I mean, things have to be done. And so in order to get ready to do your pre-opening, you may have to do some retraining. So when you bring people back in to retrain them how to serve food your way, that's all payable under the payroll system. So it never occurred to me to have somebody come in and do some paint touch up, but it was a great idea.
Ryan, anything else you want to share?
Yeah, I mean, it's hard. There's so many things, right? I mean, for me, it's one of those, when I start to daydream about what my clients are facing, it's not a daydream, it's kind of a nightmare. But when I start thinking about what they're facing and how the business model has changed and how we have so little information about what's next, about how many people can be in a dining room, about all these things, it is hard to know but I think, and again, still simultaneously balancing safety with employee livelihood, right? And so I think, yeah, I mean, I think training is a great place to start. I think that, you know, and this goes back, we talked about this yesterday, David, communication with all of your people, right? Your bankers, your employees, your everybody. It's so vital right now. Like, over communicate with these people, ask them, hear what get their ideas, use their knowledge to talk about what they're going to be comfortable with in the dining room. What can we do? I mean, is there PPE? I mean, does anybody have a sewing machine? Do they want to make custom masks for the restaurant? Like, we are all going to be facing these issues, and we're going to need to know. It's like, okay, well, how are we going to manage our bathrooms? Are we going to have bathroom attendants to give it one in, one out so we can sanitize? All of those things are, you know, owners have been in triage mode for 6 weeks. It's been hard for them to think about it. But as we emerge and shift towards spending PPP dollars, Zoom calls with your entire team, getting everybody together to get a sense of what they're thinking. You know, these restaurants thrive when everybody has ownership in the outcome. And so I would say engage your staff, talk to them about what they're hearing and what they're thinking works for you. They know your restaurant better than anybody, right? So it's like, talk to them about how they're going to be able to help you. And I'm sure you will find creative ways to compensate people for their time, their energy, and their efforts. Like, you know, if you didn't have a step-by-step training guide previously, or you have one that needs to be edited, I guarantee you that there's a server/copy editor sitting by her computer or his computer waiting to do that work. And
one thing that came up last night too, whenever we were sort of dissecting what's going on, at least here in Texas, is if you're inviting these employees to come back and work for you in a new role, a modified role, something that might stretch their expertise a little bit, it's probably best that they come back now versus, you know, 6 months from now, when we know that there are still going to be restaurants closing permanently during this period. And to have a job now and try to keep a restaurant running is going to be really beneficial, versus trying to find a job when the job market is really tight and we don't have as many restaurants in existence that we did before. So that might be, I mean, I don't know how inspirational that is for staff, but like it's true. So hopefully that'll encourage them to come back. I'm going to ask this question of Javier. Josh, I'm not going to use your last name, and hopefully you're not a client of Pilot Bank, but he is asking, since no collateral or personal guarantee on PPP, what are the ramifications if they just refuse to pay?
You're going to have the United States government go after the funds, right? So they have IRS, and good luck trying to get any type of government guaranteed loan ever again in the future. And that includes SBA financing, Fannie and Freddie Mac to buy a house. So the onus is on the business with the government, right? The banks are being held harmless, 100% guaranteed from the government. No skin off our back outside of the work. But the reality is, if there is any potential fraud or any type of misuse, intentional misuse of the funds, the government has their full litany of different abilities to make it unpleasant.
You said that very nicely, Javier. Thank you. Just for clarification, because I know a lot of people are asking about full-time employee, if that's 30 hours a week or 40 hours a week. It's 30 hours a week. They're using the ACA.
Well, what I should say is it's not defined, but what I have heard from District Director Jeff Coate out of Houston is, again, it comes back to the not defensible, but kind of, you know, you have to be able to prove and point to a guidance that this is what we used. And obviously the ACA is a federally accepted guidance to FTE calculations. I think that that's probably the strongest one to use because it worked for the Affordable Care Act, and the IRS guidance is there. So I think if you go to your bank and you say, we use 30 hours because of the ACA, I would assume that the bank is going to say, yep, that makes sense to me. We're going to go for forgiveness of 30 hours FTE.
That's what we're recommending. And aggregating your part-time employees that do the same job, like you would for the ACA.
Yeah. Javier?
Interesting update I just got from the FBA, Florida Bankers Association. As of 1 p.m. today, SBF has confirmed that 5,100 lenders approved 475,000 loans valued at $52 billion in basically 24 hours. So it looks like this round of funding will last 6 days at that pace.
All right. You know,
That
some
was
of us
it.
thought it would go till Thursday. So if it goes till
Better
Friday.
than I thought.
Okay. Thank you for that update, Javier. I appreciate that information. That's helpful. One of the questions here, Jennifer was asking, they have new locations under renovation that didn't exist during the look back periods. Will payroll for the renovation they're doing on those locations count as compensation during the PPP 8-week period? Javier?
Unless you're paying your employees to do the work, I don't foresee, it has to be payroll expenses, right? So you can't pay a contractor or a 1099 recipient or a third party to do the work and have it forgiven. It would need to be literally done by people that are W-2 wages from your company.
So the follow-up question for Jennifer might be, are you paying employees from restaurants A and B to work on the premises of restaurant C, which didn't get a PPP loan? And if so, are those legitimate payments under the PPP for those restaurant employees of A and B? And the question is, maybe? You'd be running it through a payroll of a company that's seeking forgiveness, and yet they're not necessarily going to be working in your restaurant, and yet maybe that doesn't matter. We don't really have a lot of guidance on that.
Crazy. This question just came in from Francisco. Do you count anyone over 30 hours as more than one FTE? For instance, someone working 60 hours a week, could they be considered? I can't even get the question out before these guys start shaking their head. No.
It's fun. It's fun to see everybody's head move at the same time.
Okay, great. No, Francisco, I'm sorry, that won't work. Okay, so Linda is asking a question in the chat window. Their business has never had 45 full-time employees. So their bank is saying that they're just wanting to see that they retained 90% of their employees. Okay, that doesn't really seem to be a question.
Again, I think that goes back to, like I said, I'll go back to that calculator. Go ahead, look at your look back periods, run your reports. I know ADP and a lot of the other big processors, Gusto, Intuit, have set up custom reports for the CARES Act that can give you these calculations. And if you can't, then do them yourself. Do them at 30 hours. Figure out how many FTEs you had in those look back periods. Again, February 15th through June 30th of 19, January and February of 2020. Those are the 2 periods of time. Figure out which number is smaller, and that's your target. 1-to-1 is 100% forgiveness. Anything less is pro rata.
There was a question earlier from Mark who says that he was going to put the full PPP loan amount into a money market account at 1.75% and draft monthly into another checking account. Is that okay to do, Javier?
I'm sorry, I was reading another question on the chat. I missed that one. Can I volley that to David? It looks ready and waiting.
I don't have a problem with that. I think that if you have an established business savings account, money market account, and you park it and it's still under the business, if you take it out and put it in a money market account that's in your own personal name, it might be harder to put it back in. But if it's in a business account that's earning interest, well, then that's a nice place to park it.
Okay.
Yes.
Yeah, I think going back to the initial thing, right? I mean, the bank is loaning you the money. The forgiveness could be 0. It is your money. It just has particular uses earmarked to it. But then even that, after the 8 weeks, those particular uses are also going away because it's your loan and it's your money. Meaning you have to spend these dollars in these 8 weeks on what you said you were going to. But after you go for forgiveness, you submit your forgiveness to your lender. Those dollars that are left over that didn't get spent, if you have them, a lot of people will because they won't exhaust all of it. Those are your dollars, and they may be used to pay vendors or do other things down the road. But I wouldn't do anything within those 8 weeks that you couldn't defend in front of, I don't know what kind of body, but in front of somebody. If the SBA knocks on your front door and says, let's look at everything, I would make sure that you would feel comfortable saying, yeah, this is what I did and I feel good about it. It was what was right for my business and adheres to the spirit of the law, as the quote is being said way too many times.
It has been. That's okay.
The tongue-in-cheek advice that we're giving is, unless you have a restaurant in the middle of a lake, don't go buy a boat.
What?
Unless your restaurant's in the middle of a lake, don't use that money to buy a boat, you know?
Say that again? No.
Sorry, David. It's just like the cleverness. I'm not ready for that. I'm only in black and white world right now. Sorry.
Stuff for now.
Okay. Nick has been trying to ask this question for a while, and I want to make sure we get to it. If he's saying, if I have 36 FTE in the measurement period, the look back period, but can only staff for 24 for the first 7 weeks, when and how do we meet the FTE requirement to, y'all,
you're gonna, okay, sorry.
When and how do we meet the FTE requirement to avoid forgiveness reduction by June 30th? Can he hire back 12 people on June 29th and pay them all?
Again, my reading of this is that it's an average of FTEs over the 8-week period, meaning you're going to count them in each week or in total and divide by 8 to get your average. And again, he's saying June 29th. They threw this June 30th number into the language, but that June 30th number is arbitrary. I think it was there when they thought that subscription to the service was going to go past June 30th, June 30th being the end of Q2, right? The whole point of this program, well, not the whole point, but a large point of this program was to keep unemployment numbers down. And I think that they put that backstop of June 30th thinking that people's clocks were going to go past it. They didn't realize that every single person was going to finish before it. And so as it pertains to the restaurant industry, what everybody needs to be prepared for is you're going to have an FTE number on June 15th, June 22nd, June 28th, and you may have 0 employees on June 30th. And by my readings, and Javier and David, tell me if you see it differently, that's going to be okay. It is about the number of FTEs in your 8-week period, and come June 30th, you could be closed, but you're still going to get forgiven.
Yeah.
Javier, do you feel differently on that?
Everything you said, it makes perfect sense. I have to wait for more guidance from the SBA.
June 30th is a red herring. Do not focus on that. Focus on the 8-week day. 7 weeks and 6 days after your loan funded is the day that you really care about.
Thank you, David.
From what I understand, June 30th was just the last day you can apply for forgiveness. That's not where the portion of the forgiveness calculation applies to you. It's just that's when you have to make sure you've given everything you need to the bank in order to apply for forgiveness.
So,
yeah, sorry.
It's okay. I mean, Brian, you're absolutely right about that.
I'm going to make sure in the Q&A box, I'm going to provide a link to the 12-page long FAQ from SBA that is essentially codified now, as well as the interim rule from SBA. Because there's a question that just got typed in about our number was 22 total employees when we calculated, and question number 36 of 36 addresses, sorry, that was me, addresses the number of calculations. So it was total employees to get the loan, and it is FTEs to achieve forgiveness. So I think that was from Rusty. And it also may apply to Shane Spiller's really long question that scrolled up, and I can't see it. It was really long at the beginning, but I also think that item number 36 on the FAQ will apply to that answer as well.
Exactly. And I'm sorry that in Zoom, for some reason, whenever we post links in the chat window, they don't hyperlink, which is kind of annoying, but just copy and paste it into your browser and that'll work. And I'll also send out a recap to everyone who registered for this so you can find all these links and the great calculator that Brian got for us, and anything else we can send over to you guys. We absolutely will. I'm going to ask this one more question and then we can do final thoughts. But Benjamin was asking if there's paperwork to use to apply for forgiveness. And I understand it's different for each lender. Basically depends on what they're asking for. Is that right, Javier?
There is no paperwork yet. So that is that. Once we're done with the origination, we're going to focus on the forgiveness period. I would say be prepared to receive some sort of correspondence from your financial institution where you received your PPP request from, and be prepared to have more paperwork parties to fill out the information appropriately.
Perfect. Thank you. Any final thoughts? We'll go David, Javier, and Brian.
So cash is king. Hang on to that money. If you have not applied and you think now that you want to, you should do it immediately. If you are still waiting, the chances of your application being moved through the pipeline and approved now because of the second round of funding is pretty good. So don't despair. We didn't talk about EIDL, but that's moving even more slowly than PPP. So just apply for what you can, hang on to what you can, and we understand, all of us on this call completely understand how incredibly hard it is to deploy cash when you have employees that are furloughed or laid off. And we're just recommending, I'm just recommending that people just make the absolute best choices that they can and make a determination about how to use that cash in the framework of rules we have when the 8-week period ends.
Thanks, David.
So I think the most important thing is to communicate with your banker, right? Plan ahead. Let the banker know how you intend to use the money, right? At the worst case, they can advise you to the contrary if for some reason there is some false information that you have or there was a mistake, right? At least you can catch it ahead of time. And keep that communication channel open because things change all the time. Those links that you provided, David, are critical. I have them saved on my my bookmarks, and frankly, they change, almost on a daily basis. And the one thing that you could do, no one needs, unfortunately, no one's an expert, right? Everyone here is an expert on the call because we've been doing this for a month straight.
Right.
But things keep changing, right? And it's a fluid process. And the bankers on your team, right? Well, as long as you guys are communicating and you have the dialogue open, any major changes, I'm sure we at Pilot Bank are going to be communicating to our clients and planning ahead.
Great. Brian?
Yeah, I mean, I think, organizing your activities, documenting your choices. I would recommend, I'm with David. I think that you should do what's best for your business as you currently understand it. And then I think other than that, I think, have a voice, be an advocate, call your representatives, call your senators, tell them that you're a small business that has been struggling with this particular program, that this program doesn't have enough guidance, that we need more of it, we needed it yesterday, that you would like for them to talk to their delegations and their leaders to say that we need more information. And then ultimately, I think one thing that I would say, and this is definitely me on my soapbox and being personal, but stay safe, right? At the end of it, I just feel like this is the forgiveness is big, and I understand that this, the idea of free money from a program can get people all worked up, but it's not worth it at the end of the day. If you're putting people at risk, if you're not being safe, if you're not doing what's best for your business, it's not going to be worth it. So the FTE number, if it makes sense for your business and you can get back on a one-to-one, that's great. But if you can't, you can't, and that's okay too. Like, like David said, if you have if you have money, there's no prepayment penalties. You give it back when it's said and done. And it was 8 weeks where you tried to help the employees that you could help. Frankly, I just keep coming back to look at shared work, look at reduced hours, remind your employees that if their hours are reduced, that they can have a reduced hours claim. Like, give everybody, communicate with your bankers, your employees, your investors, everybody, that you're doing everything in your power to do what's best for your business. And I think if you do that, everyone will end up hopefully in a better position than they were going into this terrible situation.
Thank you. I really appreciate all three of you being here with us on the webinar today. All the participants and the attendees, thank you for joining us for a full hour. I know we weren't able to get to every single one of your very nuanced questions, but these guys, I'm sure, will take your questions later. You know, you can always contact TRA. We're at communications@txrestaurant.org. On behalf of all of my colleagues from the Florida Restaurant and Lodging Association, as well as the Texas Restaurant Association, thank you all for joining us today, and we will continue to send you more info. So hang in there.
Thanks, Anna.
Stay safe.